Hello, everybody. So this week I want to talk about uh, the sunsetting of Trump's Tax Act. This isn't a political discussion. This is just a discussion of what could possibly happen in the future, so that we can be prepared. Excuse me. So, um, when Trump passed his tax act, I think it was 2017. There was quite a few time limits put on things. Um, excuse me. And the main time limit was that the act itself would sunset or end in 2025. And so that is a year away, less than a year away. So another two, maybe 2023 and 2024 taxes is what's left. So you need to keep these things in mind. If Trump gets reelected, they'll probably renew the act. If Trump doesn't get elected, then the act will probably sunset. So just keep in mind, I'm going to go ahead and share a screen or show um, just a bullet list of items that could become an issue. And I get it expire. The act expires in 2025, so I guess 2025 will be the last year that these things will take effect. So we've got 2 more years of tax returns. So start taking these things into account. So we're going to lose the QBI. This is the qualified business income deduction. Basically, it's 20% of your bottom line in your business. So if you have there's a lot of complexity to this rule, but for the most part, if let's say you made $100,000 in profit in your business, you get a $20,000 deduction on your tax return. So then you're only paying tax on the $80,000 that's left. That's going to go away. So that could, if you're in the highest tax bracket, $20,000 times 0.37%, that's going to represent an increase in tax of approximately $7,500. Bonus depreciation is currently 80% in 2023. It should be 80% in 24 and 25, and then that will go away. Bonus depreciation is one of those items that they actually have to pass every year. And so you never know if it's going to be available or not. A lot of states don't even recognize bonus depreciation, or they have different rules for bonus depreciation. Because of that, as a firm, we typically don't use bonus depreciation. We use Section 179 because most states also recognize that. But if you are talking to anybody doing tax planning and you are anticipating bonus depreciation, expect it to go away after 2025. One of the big things that people got to take advantage of is we lost personal exemptions and the standard deduction significantly increased. So let's say you're a family of four, a married couple. Right now, your standard deduction's around $25,000. It's going to drop probably back to about I don't remember exactly what it was, but it's probably going to be more like $4,000. So there will be a huge deduction or a huge drop in the standard deduction. And though these aren't exact numbers, this is just what I'm thinking off the top of my head. But what will return is the personal exemption. So before the Trump Tax Act of 2017, basically for everybody in your household, dependents and yourself and your spouse, you got a personal exemption. And so those will return. So that basically was a benefit. The personal exemption was a benefit if you had multiple kids, whereas the standard deduction got rid of the personal exemption and significantly increased. So that also means that itemization is probably going to come back. Right now, like 10% of the population is itemizing, whereas before the Tax Act, it was like 90% of the population was itemizing. So keep that in mind. We're going to lose pretty much the awesome standard deduction, but we will get personal exemptions back, and you're probably going to start itemizing again. A state exemption drops in half. So this would be basically there's a 6.5 million exemption on an estate for deceased people. So that's a huge exemption. That means 6.5 million of an estate is non-taxable. That's going to drop. I think before it was 500,000. This slide says it's going to drop in half, so we're looking at 3 million. So something to plan if you have relatives that are working on estates, putting together the trust and their estates, and in the event of them passing away, keep this in mind. The 2% miscellaneous itemized deductions will come back. So right now that's gone. That was one of the negotiation items. We lost that. So that the big thing there was employee expenses. So before, if you were forced to pay for stuff out of pocket as a traditional employee, you were able to write it off under itemizations as a 2% miscellaneous deduction. That went away. So there's been a lot, I've heard a lot of complaints about that when people are like, oh, I had to pay for XYZ out of pocket and I'm an employee. And it's like, well, you can't write it off. So that will come back if you're able to itemize. 2% is a cap on it, so it's really not that much beneficial anyway. It's limited anyway. Casualty losses come back. That means basically if something was stolen or burned down and you didn't get insurance money from it, then you'll be able to claim that again. Right now, AMT, alternative minimum tax, has very high brackets. That's going to go away. Then another big one is the SALT tax. So that's your state and local taxes. There's currently a $10,000 cap on that. So if you have property taxes over $10,000, it gets limited. If you have state income tax over $10,000, that gets limited to $10,000. That's the cap. So if you had $5,000 of property tax and $10,000 of state income taxes, you still only get to take $10,000 as a deduction. That's going to go away, and there won't be any limit on it in the future. Now, there are limits in the itemized deduction calculations already. State SALT taxes, state and local taxes won't have a limit on the number that you can put in there, but there are limits in the itemized deductions calculations anyway. We get a nice child tax credit, the CTC. There's some calculations in there that are going to go away. That means less people will get refundable credits if they have kids. So these are some of the things that are going to change if we lose Trump's Tax Act. Opinions on this: it's just a tax planning issue, right? So one law benefits some people better, the other law benefits other people better. You just have to understand what's going to be beneficial and what isn't, so that you can plan accordingly and make sure, excuse me, you're taking advantage of the law that is, and the way the law is going to benefit you the most. So just a couple of tax planning ideas to keep in mind. So this is probably the biggest one for me, is going to be this QBI deduction ending. That's probably going to be the biggest one, and then the estate exemption drops. Those are going to be the two biggest items for me personally, because I have relatives that are looking at putting together their estates and stuff, and so it's vital that they get everything into a trust so that they're protected. And then the QBI, there's nothing we can really do about that. It just means you're going to get a deduction's going to just disappear. A 20% deduction off your business is just going to disappear, and there's nothing you can do about it. So that's going to hurt. We're all going to feel that. Anyway, so that is my video for this week. I hope this is beneficial as you think to the future and plan what could potentially help you. All right. Have a good day.